Optimism is high, sentiment has increased. It looks like the US and Iran will sit down and talk again. Also, for the first time in 30 years, we've got Israel and Lebanon looking to sit down at the negotiation table and talk there. Fundamentals have been thrown out the window. Massive moves in oil, in gold, in FX and in stock market. Hello and welcome to ATFX. My name's Nick Twidale. I'm the Chief Market Analyst, and today we're going to be looking at the impact on the market of the recent conflict that we've got in the Middle East and how they've hit markets, particularly focusing on oil markets, gold markets, and US stocks, with particular focus on the NASDAQ, which has been extremely volatile. Current conditions at the moment, and they do change very swiftly, as we're probably all aware. Optimism is high, sentiment has increased. It looks like the US and Iran will sit down and talk again. That's very positive. Also, for the first time in 30 years, we've got Israel and Lebanon looking to sit down at the negotiation table and talk there. And that side of the conflict is very important. Obviously, we know Hezbollah was sponsored heavily by Iran. That's been linked to the conflict that we've got in the Middle East and everything that's going on. Straits of Hormuz, massive choke point in a few different ways as well. Not only is it the strait that everyone has to pass through to get their oil out of the Gulf, but also obviously a big point of conflict, I suppose, for the US and Iran. Iran has control. Still seeing very limited shipping coming through there. We now have, of course, an Iranian blockade and a US blockade going on. So all sorts going on, but things looking positive. And I'll show you the charts. We'll run through where there's some trading opportunities, where moves can occur, and they could be massive moves, depending on which way the next move flips of the coin. As always, if you haven't subscribed to our channel yet, please click the button. We'll keep you up to date as much as we can with what's going on, because it is coming thick and fast at the moment. So here we are. This is the West Texas Intermediate WTI chart, which most people are trading, either West Texas and Brent. Interesting that what we have seen recently with WTI and Brent normally trades at a premium to WTI. That has flipped a few times during the conflict. So interesting part, it is now back in its normal, for however long, ratio, where WTI is trading beneath the Brent price. This is all to do with transport costs. I'll run us through a few of the moves that we've seen in WTI. Brent's trading in a similar pattern. Clearly what we see on these moves are, once geopolitical threats increase, once we see hostilities, we've seen huge moves to the top side in oil because supply concerns become massive, especially while we've still got this ongoing concern with the Strait of Hormuz being shut. We've seen some sharp moves, equally sharp moves, some would say, in the opposite direction when things have looked to settle, as they are now. So we're back near kind of monthly lows. As we speak, as I said, that could change very quickly. If we do start seeing talks making progress, expect it to move lower. If we see a flip turn again and the possibility of hostilities renewing either at the end of the ceasefire or before the ceasefire is predicted to end, we could see oil shoot straight to the top. So bringing you in a little bit more depth on WTI. So here we've got, once we started seeing hostilities move, we were trading down around nicely under these $70 levels down here. And as you can see, marginally moving higher, oil since the start of the year, but pretty much trending and trading in nice ranges. Then we started to see these moves really exacerbate. This is when hostilities started. This is when strikes came out of the US and Israel into Iran. We saw a huge move on the day. As you can see here, it's only saying a 4.6 move, but I think you find there's like a 25% move up here. It capped out at 120. That's a similar level that we saw on the initial hostilities back between Russia and Ukraine. On the day, as you could see, we opened here at 98 and we closed here at 94. So it was actually down, but massive moves up to the top. Liquidity was an issue. It was a Monday. All sorts of issues, and you'll see how that translates through both to gold and to stocks as we move on to those other charts. These intraday moves, this is a daily chart, so it doesn't give us the full volatility, massive volatility on hourly charts. But as you can see here, as the hostilities have increased or continued, we've seen a move back up here, and we've seen massive moves up, massive move down on increased strikes, and then on talks of peace and all that's been going on, everyone will be kept up to date with it. As we've said, moves up as hostilities increase, moves down when we've got talks progressing, and signs of peace coming through. As I said, now we're sitting around here, around $90. Nice easy number to remember on WTI. Have a look down here. From a technical perspective, we've got this support trend line. It's not a great trend line. It's only really got the one support. We'll probably look at these lows here that we got back down to around about 84. We've got down to a low here around $87 a barrel. Expect further good news, sentiment up, to see oil move further to the downside. So a break of this level in the next day, in the next couple of days, could see a move down to these, and then you're opening up the way all the way down here. You would expect, all things being equal, that if we do see a resumption of normal circumstances, we could see oil all the way back down to these 70 levels. And here's that 200-day moving average. That's at 67. That feels fair to me. But we do have to take into consideration the impact of the last 6 or 7 weeks of conflict, how that's going to affect oil supplies. So it may take a while to get back down there. Conversely, of course, if we do a flip, if we see a flip, if Iran don't come to the table, if the US don't come to the table, if President Trump gets more aggressive, if that ceasefire looks like it's going to end and end in a bad way, we could see this move retrace very quickly. We really don't know what's going to happen. We're not inside the negotiation table. So that's oil. Massive moves on the day. As you can see here, this is like a 16% move. As I said, this is like 25. Big moves, big trading opportunities, obviously also big risk as you take them. Right, let's go and have a little look at gold and how that's been moving. And that has been interesting. So here's the gold chart, which most of you will be familiar with if you've been tuning into our videos. And it has been a very strange story for most people that are long experienced in trading gold. Normally, when you get increased geopolitical concerns, which wars tend to bring about, and you get conflict, and you get missile strikes, and you get, sadly, people dying, you normally see gold move to the top side. What we've seen as a pattern in this conflict has actually been that it's trading in line with the dollar side of this equation. Obviously, this is gold against the dollar. When the dollar's appreciated, gold has depreciated. And when the dollar's depreciated, we've seen gold move to the top side. And that's what we're seeing at the moment. So the last couple of days, when things have got better and we've had talk of a ceasing of hostilities, peace talks on the table, gold has moved from down here. We've got a lows around 46.30. We're up at 48.50 now, so it's $200 higher. It's very unusual, but we have to trade what we're seeing. It's trading much more heavily with the US side of the equation. That links in with US yields as well. You get yield for holding dollars, you get nothing for holding gold. But for many in the market, it has been a strange phenomenon that we've seen. Normally, increased risk. If you'd asked me, if you'd asked a lot of other analysts at the start of the conflict, US are going to start throwing missiles at Iran. Iran's going to start throwing, and Iran's going to throw them back, not only at Israel, but also at other Gulf partners. I would have been thinking gold would be somewhere up here, breaking new highs. As you can see, all the way back at the start, we were around about 53. So it wouldn't have taken much to break this all-time record high. But we saw it come down and come down hard, all the way down to this. Like it nicely from a technical perspective, literally hit that 200-day moving average nearly on the spot. It's climbed nicely as we've seen signs of progress. So at the moment, trading gold, you have to trade it through the dollar side. Good news actually means gold going higher. Bad news means it's going lower. How long that correlation stays for, we don't know, but trade what you see. That's how gold's moving. I'll move on now. We'll have a quick look at the NASDAQ and then we'll complete things up. So here's the NASDAQ chart, a long way out. I'll bring it in for a bit more focus as we're moving, but massive volatility in the NASDAQ, obviously a tech side of the equity stocks. When things are looking good, tech's obviously been a massive focus for global markets for a long time now. And certainly the last few years, we've seen huge moves. I mean, this is, where were we down here? Lows down at 17,387, and we hit the all-time high up here at 26,000. These are massive moves. We're seeing huge volatility in the market. I'll just bring us in for a little bit more closer analysis, I suppose. This has been the NASDAQ. It has been flying around, as you can see, these moves, big 1% moves, 2% moves. I think the biggest we've seen is about a 4% move on the day, but it is flying up and down. And once again, it comes down to updates on what we're seeing in the Middle East. Good news, we're moving to the top. This is what we've seen over the last couple of days. Look, a low down here just underneath 25,000. We're up approaching 26,000 now. Massive moves in the market. Bear in mind, we are approaching key technical levels. This is the resistance trend line. That's coming in at 26, the previous high, 26,165, then the all-time high, 26,182. Expect things to be a bit sticky here. But if the good news continues, we could be challenging that level soon. Break higher, open the way for new moves to the top side. Obviously, a lot will be going. We've got earnings season coming up, those tech firms, how they've been affected by what's been going on in the Middle East. But percentage-wise, we are seeing massive moves. Those thinking that things aren't going to go so well, selling here with a stop above that may be the way to go. So it will be all news-driven. It will be news that's dictating where moves go, but certainly plenty of trading opportunities out there, plenty of risk. But if you need anything from us at ATFX, please do let us know and we'll get back to you as soon as possible. Thanks for tuning in and good luck with your trading.